We keep hearing numerous stories of how insurance on everything is continuing to become unaffordable. Like here in Florida, for example, you've seen a lot of insurance companies just completely bail and they don't write insurance policies here anymore. And then it started happening in California as well. And one of the insurance companies that pulled out of the state of California was Allstate. They stopped selling all forms of insurance in California. But now Allstate is attempting to re-enter the California market when it comes to car insurance, and you have to buy it directly from them over the phone or on their website now. No more insurance agent. And if you want to go with them, it's going to cost you 30% more now. So basically, yeah, we'll insure you, but it's going to cost you a whole lot more, which is the case for all kinds of insurance. So I don't know, I guess you can look at this as a positive or a negative. The fact that there's another option again and having another company to choose from, I suppose, is a good thing. But if it's unaffordable for people, then it really doesn't help anyone. So now they're saying for people who have car insurance in California, some people are going to see a 10 to 15% increase, but some people are going to see it go up by as much as 55%. But the average will be anywhere between 25 and 45% for most people, guys. Imagine getting hit with an increase like that. I got hit with a 25% increase in my car insurance this year, and I had to cut all my coverages in half and go through all sorts of financial hula hoops, raising the deductible, basically everything I could to make that premium go down. So I was able to get it down, but you're still paying a lot of money for way less coverage is what it is now for me. And insurance companies are also blaming some of this on the pandemic, because apparently the insurance commissioner in California, when the stay-at-home mandates came in April of 2020, they made insurance companies reimburse people for their March, April, and in some cases the May insurance premiums for that year, which ended up costing insurance companies back then $2.6 billion in refunded premiums. So they're also saying this is yet another reason why we have to charge more in California, because we're trying to recoup our losses. They're also saying that between 2020 and 2022, there was no new approvals for insurance increases in the state of California, which has also led to these surging prices now. And they're going to talk about how State Farm subsidiaries in 2022 paid out 92% of all the premiums it brought in to cover claims, which adds up to a net loss when you factor in agent salaries, marketing, and other overhead costs for the company. So essentially State Farm, spent more money than they brought in 2022, which was one of their reasons for exiting the California market. It's kind of a similar story with Allstate. They spent 90% of their premiums just to cover claims. Geico, same thing. So that's why you see all these insurance companies pull out of the state, guys. So really what it comes down to is they don't want to take losses. They can't take losses. They need to turn a profit just like every other company in order to stay in business. This is just another one of those things out there in the world right now that is going up in price so fast and so exponentially that people actually need to have, by law, pretty much everywhere. And if you don't have it, there's penalties. If you don't have it, you can lose your driver's license, end up in jail. Who knows what could happen if you don't have insurance and you end up getting pulled over or end up in an accident. But systematically, one by one, you're seeing all these expenses that people need to pay for balloon past affordability. If you have insurance in California, you still have State Farm or Geico, and you miraculously didn't get dropped. Yeah, State Farm, they're raising your rates by 21% this year. Geico is raising them by 12.8%. But you see, companies like Allstate, this is how all insurance companies work, is they will raise the rates in other areas to compensate for this, guys, because Allstate is going to be raising their rates by 14.6% in New York and 20% in New Jersey. And they say that between these three rate increases, it should bring in an extra $1 billion in premiums over the course of the year. So these insurance companies are getting really good at robbing Peter to pay Paul. And I just keep wondering when I see all these increases, like, how much further can this go? How many more increases can people absorb with insurance, with housing, with groceries, with fuel, with everything that we need to buy before they just can't pay for it anymore? I feel like that day is getting closer and closer, and people are just going to systematically start cutting things like insurance out of their budget. You don't need insurance to survive. Are you breaking the law by not having it? Yeah. Can you get by without it for a while before you end up getting caught? Probably. I think that's going to be the chance most people are going to be willing to take. And guys, I really don't like talking about all this stuff with the electric cars, but I just see so many stories about them lately that I have to bring this stuff up because, you know, people are always talking about how Tesla is the greatest company, you know, they have the best electric cars and all of this, and obviously their sales figures and how well they've fared in the EV market compared to other automakers is proof of that. However, even Tesla is not immune to people not buying EVs, okay? Because they have slashed their prices tremendously over the past couple of years. And now, this month, they just slashed their Tesla Model Y down an extra $1,000. And Elon Musk is saying it's because of winter, because people don't buy cars in winter, you know, that the car buying season is seasonal, just like the housing market, essentially. And this $1,000 price cut is an incentive because most people are not going to buy the cars in the middle of winter, and we need to keep production regular in order to keep these vehicles being pumped out. But all these price cuts seem to be hurting Tesla pretty substantially because Tesla's stock is down about 23% so far just in 2024, and the year just kind of got started. So that's not a very good start to the year, which actually makes it the worst performing stock in the S&P 500. They cut the price on their Tesla Model Y by over $5,000 in Germany, actually. And in China, they're also cutting prices on the Model 3 and the Model Y. So far, Tesla's basically taken a 20% haircut on all of their car prices so far since the beginning of 2023. And of course, they say it's due to competition in the market, right? Because so many other manufacturers are making EVs. But if that were true, then how come nobody's buying those other EVs, right? Tesla seems to be the only EV company that is actually making money and is actually selling a substantial amount of cars recently. According to what I'm reading here, Tesla only has really one big competitor when you're looking at a global scale, and that's BYD over in China. They sell more electric cars than any other manufacturer in the world, but Tesla still makes more money per sale. But I think there's a lot of signs that people are giving up on owning these cars. Like we just talked about car insurance. For the vast majority of people, it's more expensive to insure these cars and to buy them and to maintain them. But for the first time ever, the EV sales in California are falling. And obviously, you guys have seen my videos when I was in California, and there are electric cars everywhere there, or we should just say Teslas are everywhere, right? Like you really don't see that many other electric cars anywhere, I don't think. You see a few of them here and there, which is hammers the point what we're going to talk about here. But for the first time in more than 1 decade, electric vehicle sales have dropped significantly in the last half of 2023 in the state of California. And right now, nobody knows what to think of it. They don't know if this is just a temporary slowdown or if people in California are finally getting tired of electric cars. And this is a big problem because starting in 2035, California wants to start banning the sale of all gas-powered cars in the state. So that is not very far away. You're talking, 11 years from now. According to the director of automotive engineering over at AAA, he says that the government and automakers have spent billions of dollars on something consumers may not want, and which is really added up in the sales figures, guys. I did a whole video on this a few weeks ago showing you just how low the EV sales are compared to gas-powered cars. But the reason why this is important is because California has been the leader on all of this, right? They're the ones who are saying, oh, we're going to ban gas-powered cars. And you see everybody over there with a Tesla. I saw so many of them, more than anywhere else, more than here for sure. And in the first half of 2023, the electric car sales got off to a good start. It went up 48% in the first half of the year. But by the time the fourth quarter of the year rolled around, the sales were down by 10.2%. That's a pretty big difference. Currently, there's about 1.4 million electric cars on the road in California, which make up about 20% of all new car sales. And they have another mandate over there that says by the year 2026, so in just 2 years from now, that zero emission and no gas vehicles need to make up for 35% of the new vehicle sales in the state. And obviously, they're not on track to hit that with this most recent data. According to the California Car Dealers Association, they say it's conceivable that we might be able to get to 35% in 2 years, but it's going to be difficult to get there. So already, this right here, guys, it's going to be difficult to get there. So you're telling me this amazing product that supposedly everybody wants, we're going to have to force everyone to have at least 35% of the new sales in 2 years from now, even though people don't want it. How are you going to jam this down people's throat over there? It really seems like the government over there is clearly overstepping their bounds on this one, because if you have to force people to buy a product by law when there's an alternative product that they would rather have, that is not a free market. And some companies are going completely in reverse, guys. Like Hertz, they announced a few weeks back, maybe a month ago, something like that, that they're getting rid of all 100,000 of their electric cars. They're done with electric cars. They lose too much money on them. They're in more accidents. They're more expensive to repair when the accidents happen. It's just not profitable for the car rental companies. And think about it, if it's not profitable for the car rental companies, it's probably not a good deal for you, the consumer, either. But some people are saying, oh, you know, these sales figures are worrisome, but there's plenty of momentum behind the EV transition, as evidenced by government mandates around the globe and massive investments by motor vehicle manufacturers and their suppliers. So this is the scary part, guys, because the reason why this is becoming more and more popular is because of what they said, government mandates across the globe. This is not something that people signed up for and said we want. It's something that the political agendas are trying to push on you. To me, that's already reason number one not to buy it, because if they're trying to force you to buy it, there's obviously a clear motive of why they want you to do it. I've always been the rebellious type, so if they say that I have to do it, I'm not going to do it. But these governments and companies are pouring billions of dollars into this over the next 5 years. It's estimated that they're going to be spending $616 billion investing in this electric car future. And of course, there's all types of reasons why people don't want to do this besides the government mandates. You have the undependable chargers. These charging stations fail at least 20% of the time. I saw a video out of Canada that they did in the middle of winter here, where they tried 12 charging stations and only 7 of them worked, guys. So barely more than half of the charging stations actually worked. That is not a very good record for keeping your car charged. At the same time, California has given out $1 billion to EV charging companies, okay, that build these chargers like ChargePoint, Electrify America, and EVgo. And they're trying to find a way to hold them accountable to making sure that these charging stations work, since that's one of the #1 issues that people have with these electric cars. So they're giving away a ton of money over there to these companies that make these chargers, and they probably build them as cheaply as possible, like every other company does with anything, and there's no accountability. So they put it in place, it's built, it malfunctions, tough, we got your money. Here's the other problem. Even if these EV chargers were reliable, there's not enough of them to go around, because the actual sales of electric cars have outpaced the public charger installation. There's about 93,000 publicly accessible charging stations throughout the state of California, and about 10,000 of those are fast chargers. And they say they need to have about 250,000 by 2025. So you're telling me they're gonna triple the amount that they have right now in 1 year? I don't think so. So once again, the government here is pushing an agenda that cannot be met. And let's not forget about the price, guys. The price of these cars are still far more expensive than a regular gas-powered car. The average EV price is about $55,000 compared to about $48,000 for a gas-powered car. So that's $7 grand, okay? Most people don't have $7 grand at all, let alone to spend extra $7 grand on a car. You have Ford and GM, they're scaling back on their EV production substantially because they can't turn a profit on these cars. And in California, as if they don't already have enough mandates and crazy stuff they do over there, they're putting strict income ceilings in place to qualify for any of the subsidies. So poor buyers will get more incentives, while rich buyers will get nothing. So typical California, stealing from the rich and giving to the poor. That seems to be their MO over there. But I really don't see more and more people jumping on the bandwagon now that the cat is out of the bag with EVs. Like, the vast majority of drivers know about how much lower of a range you get when you're driving them. People know about the issues with charging, and just from a time standpoint of how long it takes to charge, especially getting to a full charge. I saw this funny video from Scotty Kilmer. He's a car channel the other day, and he was talking about how, you know, most people, they only charge the car from when it has 20% charge up to 80% charge. That's about 60% of the battery you're actually using, because nobody wants to wait for the charge to go past 80%. So you're only really using 60% of your actual capacity of the battery at any given time with a lot of these electric vehicles, which further reinforces what I've been saying here, that they're probably great for in-town driving and you can charge it at home. That can be a good setup. But for people that need to drive a lot, far distances, or like taking road trips like me, it's a no-go. Here's the funniest part of all. They're saying that the EV sales are also down in California, specifically Tesla, because more and more people in California are getting tired of Elon Musk. They're getting tired of all his political stances, essentially. This one was just too funny when I read this. Like, you're telling me you're gonna boycott a car brand. They even talked to a woman that bought a Tesla, and ever since Elon Musk took over Twitter, that now she wants to give the Tesla back because she doesn't believe in all the things he's saying. She doesn't agree with his politics. Sorry, Karen. I mean, this is just the most woke, broke, idiotic thing I've ever heard, guys. I mean, and you know what? The city of San Francisco already tried something like this. They tried boycotting doing business with many different states across the country that didn't align with all of their, you know, transgender policies and all these things they're trying to push forward in the world, right? Well, now it's gotten to the point where whenever the city of San Francisco needs to get something done, they can't get it done because they don't have anybody to manufacture things for them. They don't have people to do contract work for them, and the contracts that are available to them are way too expensive, so they can't afford it. So now they got to start opening up contracts once again to states that don't align with their policies. So this is what happens when you try to box yourself out politically. You end up pushing yourself into a corner where there's literally nobody left to do business with because you're trying to, you know, run a city based on political beliefs. I guess that's where the saying, go woke, go broke, comes from. Now, a lot of people don't want to believe that we are heading into a recession right now, but when you take a look at the global economy, forget about just the United States, it is apparent that that's exactly where we're headed. You think the commercial real estate problem is bad here in the US? This is a problem worldwide right now, and the defaults on the commercial real estate globally are looking to be so bad right now that it's probably going to trigger a big global recession, guys. So this time it's going to be the entire world in a recession, not just the United States and then bringing down parts of the world with us. It's going to be everybody. And whether you like it or not, whether you've been reading all these feel-good stories about how good we're doing here in the US, we are going to be affected by this. Germany, they're already in a recession. That's official right now, by the way. Also, Japan and the UK are officially in recession as well. These are not my opinion, guys. These are facts of what's really happening. And, you know, the UK and Japan are the 4th and 6th largest economies in the world. And to sit there and say that that's not going to have any impact on us here in the US is a dream. And of course, we can't forget about China. China's in big trouble right now too. China just had a huge burst in their credit and real estate market over there. And over the past year, home prices have been falling and property developers defaulting on their mountain of debt. And this has translated to China having the world's worst performing stock market over the past year. So China's headed for a lost decade right now with their stock market. Then we have the world banking problems right now. The entire banking system is built on low interest rates across the world. This is not a problem unique to us here in the US. This is everywhere, guys. And now that we have these higher interest rates for longer everywhere, all of these banks are looking at failures globally. So right now they say that the only hope is that all the different economies across the world start cutting interest rates soon in order to support the world financial system. Oh, that sounds pretty serious, huh? And they say if that doesn't happen, then we should brace ourselves for another painful US and global recession, guys. Finally, a piece of news I can agree with. What have I been saying here on the channel? That's where we're headed, guys. And guess what? We've been getting all these higher inflation readings, which is going to make the Fed continue to hold rates higher for longer, far longer than any of the markets anticipated. And I think they're going to hold them higher just long enough to facilitate this entire global recession. That's my opinion. That's where I think we're going to end up. I honestly don't think it matters who becomes our next president either, no matter if it's Trump or Biden or whoever the Democrats decide to throw in there last minute. No matter who ends up president next, they're going to get hit with a ton of bricks when we get slapped with this big global recession, that's for sure. So if you guys enjoyed this video, make sure you subscribe to the channel. And if you don't want to wait for my next video to come out, be sure to check out this one on the screen right over here, and I'll see you in the next one.